Okay, so good afternoon. My name is John McKenney, and I am the Financial Education Coordinator with the Office of the State Treasurer. And today I am partnered with Stephanie Sampedro, the Student Loan Advocate for the Washington Student Achievement Council. So I just want to start off by saying thank you, Stephanie. I appreciate your expertise and guidance today as we dive into this topic of student loans and specifically the Public Service Loan Forgiveness Workshop program. And I'm definitely really glad that we're able to provide this, I think, very timely and important information for folks who are here today. Before we get started, I just want to, let me see here. Let me do it. Hang on one second. There we go. Okay, so yes, real quick, those are my introductions. You will be receiving this in an email, and I'm actually going to get to that, but a few things I wanted to get cleared up just before we get started, which really leads me to all of you guys who are attending. Thank you very much for being here today. I think that any time that we can share ways to save money, pay down our debt, and boost our ability to generate wealth is definitely a good time. So hopefully this information will make things a little bit clearer for you in regards to your student loans. I have a few parameters here I just want to go over, is that I do have everyone muted at this point just to avoid background noise. And if internet connection's slow, because we have quite a few participants who are coming in, if the internet connection does slow, we can opt to turn off cameras, but I'm assuming at this point quite a few of you already do, so I'm not going to worry about it right now at this point. But I will email everyone who registered for this workshop a copy of this PowerPoint presentation. So don't worry about receiving that. You will get that at the end of the workshop. And then before we go into questions, I do have a few slides to just quickly go over to show you some of the resources that will also come with that email. And then lastly, I do ask that you please hold your questions till the very end. And then at that time, once we've had a chance to finish going through everything, we'll do our best to answer as many questions as you can. So without further ado, I will hand things over to Stephanie. And I'm going to stop sharing my screen and do that. And 1 second, let me hang on. Sorry, Stephanie.
All right.
There you go.
Yeah, okay. Sorry, I'm getting confused with my two screens. All right, so I'm going to share my screen now. And John, can you just give me a thumbs up if that looks good? Cool, okay. Well, thank you all for being here. My name, as John said, is Stephanie Sampedro, and I'm the student loan advocate for the state. And my job here today is to really just help get you all the information I can about PSLF and the limited waiver opportunity. And I plan to go through it and leave plenty of time for questions. So this is your time to ask them all. Okay. There we go. Okay, so just briefly, the Washington Student Achievement Council is a state agency that helps advance educational opportunities for folks in Washington. And we have various different divisions within WASAC, and I work in the Consumer Protection Division. And so we handle complaints from student loan borrowers, but then our division also helps authorize institutions to operate in the state of Washington and make sure that they comply with state laws. And so here's just a couple of outcomes or things that I'm going to cover. So I'm going to talk about how to find loan information, PSLF eligibility, repayment plans, applying for PSLF, the limited waiver opportunity, some other information related to the topic, and then how to make complaints. And we'll also talk about resources as well. So I like to start off with just a snapshot of what debt looks like in the state of Washington. And so here are our numbers. And the recent loan forgiveness or loan cancellation that was announced said that about 600, I think, and 97 folks in the state of Washington will benefit in some way from that. So that's about 90%, which is really exciting. But we have about 27.4 billion, and the average student loan debt in the state is 35,000, which is below the national average. So while Washington is doing well, it doesn't mean that people aren't also struggling. So I like to show this slide just to sort of normalize student debt, because at this point it is very normal to have it. And I think folks can sometimes have a lot of shame or embarrassment about it. And so I just try to make folks realize that it is very common to have, and you shouldn't have shame over it. So some key terms that I'm going to use today, capitalization, that means adding any unpaid interest to the principal of the loan and then charging interest on that new loan balance. This is a function that happens that can a lot of times push folks into a position where they see their loan balance grow significantly. So that's what capitalization is. Discretionary income is, as defined by the Department of Education, is the difference between one's annual income and 150% of the poverty guideline for the state that you reside in and the size of the household. And then the servicer is the company. It is not your lender. It's the company that handles billing and other services for the student loan. And then lastly, a collection agency is an entity that helps recover any unpaid debts for defaulted loans. Oops. Okay. So I wanted to start also by talking a little bit about the Washington Student Loan Bill of Rights. So this was passed in 2018. It established my position within the Student Achievement Council, but it also requires student loan servicers to be licensed with the Department of Financial Institutions, which is crucial because then it enables our state to enforce state consumer protection laws against the servicers. Previously, we were not able to do that. Schools and servicers also have to notify borrowers in the state of Washington about the existence of the student loan advocate, and they have to do this once annually or have information on their website. They have to request, or borrowers can request information from their servicers and are required to receive it within a certain period of time, and then they can also make complaints to the advocate. And then the advocate, myself, can make recommendations to the legislature regarding student loan debt in Washington. But then, crucially, also you have borrower rights at the federal level. So you can get a rate reduction by 0.25% if you sign up for automatic payments. You are entitled to change a repayment plan into an IDR plan or between any of them, an income-driven repayment plan at any time. You're given economic hardship for up to 3 years. And then you can apply for forgiveness if you meet qualifications. And then if you are in default, you can get out of default through rehabilitation and request that it has to be reasonable and affordable. So I also just wanted to touch on some of the things that have happened since March of 2020. So the CARES Act was passed in early 2020 and instituted a payment pause or a suspension of payments. This also made interest drop to 0%, and all non-payments throughout this payment suspension are eligible for public service loan forgiveness and income-driven repayment forgiveness, as well as rehabilitation if a borrower was in default through the pandemic. And then it also stopped collections on defaulted loans. These protections only applied to federally owned loans, which means all direct loans. So if you have direct loans, you are covered, and some FEL loans, which I'll talk a little bit more about later. But FEL loans can be federally owned or they can be commercially owned. And then just a PSA, if you made a payment, like a voluntary payment, so you weren't required to make one on your loans after March 13th, you can get a refund. And then if your tax return, wages, or any benefits were garnished after March 13th, you can also have those funds returned to you. So more things that are happening. I'm sure you have heard of some of these in the news, but there have been major servicer transfers. And for any of you who are in the process of applying for PSLF, you probably have noticed that FedLoan has probably at this point transferred your loans to MOHELA. So FedLoan discontinued their contract with the department and instead transferred all of their loans to MOHELA. So now MOHELA will service loans under the PSLF program. And then Navient also left, and they transferred their loans over to a company called Aidvantage. The return to repayment will begin on January 1st of next year. So that means payments will resume and interest will begin to accrue again. The PSLF waiver, which we're going to talk a lot about, ends on October 31st of this year. So it's really crucial to make sure you are getting all of your documentation, or at least starting the process by October 31st. And then the one-time adjustment period was supposed to happen in the fall. It's now happening in 2023. I don't have more information about that at this time. And then also the fresh start, which moves folks out of default and makes them eligible for Title IV aid or financial aid, that is in effect now and for the next year. So if anyone is also has had loans in default and is looking to return to school, that is also something that can happen now. And then the one-time relief application will be available next month. And I don't have more information on that proposed 5% IDR plan that Biden proposed at the time of the relief, but we should see more information coming out soon. Okay, so step one. If you have not already, then you are going to want to make sure that you have an FSA. You know what it is. This is a username and password that you use to log into the Department of Education's website so that you can view your loan information there, but also so that you can use a lot of the tools on their website. Step two is looking at your loan data. So once you sign into this, the department's website, you come to this landing page and they will show your outstanding loan balance, the principal, interest, and then if you click on view details, it gives you much more detailed information about the type of loans that you have, et cetera. And then this is just a list of all of the federal student aid servicers that were in effect earlier this year. FedLoan was the agency that was managing PSLF, but they have since left, and so now it's MOHELA. So if MOHELA is not your servicer, that just means that you haven't yet applied for PSLF, or you haven't yet informed your servicer that you work in the public sector and are intending to apply for PSLF. It doesn't mean anything else. Okay, so now I'm going to talk about normal PSLF eligibility, and then I'm going to talk about what has changed with the waiver. So the first requirement for public service loan forgiveness normally is that you have eligible loans. So this is a look at all of the types of federal loans that still exist. So direct loans is the current program. Plus loans is an additional loan program for either graduate students or parents with dependent children in education, in higher education. A Perkins loan is something that was a loan that a borrower borrowed directly from the school, but this also was discontinued in 2017. So it's possible you might still have Perkins loans, but they're not issuing new ones. Then we have the Federal Family Education Loan Program. So this is a program that was discontinued in 2010, where the Department of Education basically contracted with private financial institutions. Those financial institutions were actually the ones originating and lending the money. And they were just guaranteed by the federal government that they would be paid if the borrower couldn't pay for whatever reason. So that was discontinued, but that's why those are called, a lot of those are called commercially held, because they're held by private financial institutions. And then lastly, we have consolidation loans. So those can be either those older FFEL loans if you consolidated previous to 2010, but if you consolidated today, you would have a direct consolidation loan. And I realized I didn't explain it's a little thing, but a subsidized loan is for undergraduate education, and it means that there's no interest accruing or your interest is subsidized while you're in school. And an unsubsidized loan is interest accrues, there's no subsidy. So interest is accruing as soon as the loan's dispersed. So the loans that are eligible for public service loan forgiveness are direct loans. And that can be both subsidized and unsubsidized and direct consolidation loans. It can also be grad plus loans, direct grad plus loans, as long as they are direct. And it can be parent plus loans if they are consolidated into a direct consolidation loan. I don't know why, but that is the requirement in order for someone with parent plus loans to participate in PSLF. So that's the type of loans you need, direct loans. And then the repayment plan is the next step. So you need to be in an eligible repayment plan. This is a screenshot of something called the loan simulator, which you can use your FSA ID to sign into and then put in some income information and tax filing status, and then it will generate your monthly payment on each of the repayment plans. So a very useful tool. So of all of the plans, there are, I think, 9 of them. Only some qualify for PSLF. So the standard repayment plan, which is 60 to 120 equal payments, is eligible for the PSLF program. However, it is structured so that you pay it off in 10 years. So it doesn't make sense to be on the standard repayment plan for the entirety of the 120 payments because you'd pay the loan off. But if you made a few payments here and there that were part of the standard repayment plan, those are eligible for PSLF. But really, you want to make sure that you're in an income-driven repayment plan. And so this is a list of all of them. So there is a forgiveness function that happens with the income-driven repayment plans, but as you can see, it happens in a much longer period than PSLF. However, this is sort of like a component to PSLF. So you need to be in any of these repayment plans and making active payments. These do base your monthly income or your monthly payment on a portion of your income, your discretionary income. And as you can see, there's different percentages. And so that is based on your household size and your income. So a household of 1 in Washington for 2022 was, this was 150% of the federal poverty line. So anything you earned above that would be considered discretionary. And some of these you need to have, I think what they still call economic hardship or something to that effect, basically like a lower income relative to your debt. However, the income contingent repayment plan, that doesn't matter. You can make a lot of money and still repay your loans through that repayment plan. So there's always that option. If you were told like you don't qualify for any of them, you just don't qualify for income-based repayment or any of the others, but you do qualify for income contingent. Okay, so you have the right types of loans, you're on the right repayment plan. The third requirement is that your employment meets certain standards. So you have to be a full-time employee, and full-time is defined as 30 hours a week or full-time as defined by your employer. And importantly, full-time as defined by your employer, whichever is more. And then part-time public service jobs, if you have more than one, so say you worked 2 part-time jobs at 2 different nonprofits and worked 20 hours a week at each, that based on that employment, you would be eligible for PSLF because the 2 jobs combined add up to full-time work. And then, so that's full-time. Then your employer has to be a public employer, which means any level of government, including local, county, tribal, et cetera, or a 501c3 organization. And this is something that your nonprofit organization should be able to tell you based on their tax filing status. And then I get asked this a lot, the type of job you have doesn't really matter. It's more so, is your employer a public employer? So you could be a maintenance worker at a school. As long as you're being paid by the school district, you are a public employee. And then also crucially, you have to be employed when you apply for forgiveness and when forgiveness is granted. So this is, I think, the biggest area I see an issue here is like, I will talk to people who just retired from work in the public sector, but because they were not employed at the time that they applied for forgiveness, they're not eligible for the program anymore. And then I also have this last column with a little asterisk. You can sometimes qualify if your employer is a 501c4 organization, but there's only specific sort of buckets that they will honor. So this is a list of them. Really, the best way to figure out if your employer qualifies is using something called the PSLF help tool, which I'll talk a little bit about later. But that enables you to use your employer's employer identification number for their taxes, and it will let you know if your employer is eligible or not. Okay, so the fourth requirement is that you have to make 120 qualifying payments. And these payments have to be on time, in full, scheduled, and made after October 1st, 2007, because that's when the PSLF program started. And then they have to be made via a qualifying repayment plan. The payments are not required to be made consecutively or made with only one servicer. So you can have multiple servicers. Then, if you feel like you've met all of these requirements, then what you would do is basically inform your servicer that you want to apply for PSLF. So you fill out what is now just one form that has this very long name. And this was created in 2020 to try to eliminate some confusion and like eliminate a lot of paper. So you would now, if you were just telling your servicer like, hey, I'm working for, you know, the state of Washington and I want to apply for PSLF in the future, you submit the form and just check a box that says, I'm just certifying my employment. And your employer will be required to sign off, basically attesting that you do in fact work there full time. And then you would send that form to Mohila, who is now the new servicer for PSLF. And then this can be done via the help tool or on paper and then submitted to Mohila. It's typically recommended that you do it every year, or I would say at the max, like every 2 or 3 years, just so that you have a growing number and you know where you stand with the program and you're making sure that they're counted appropriately. And then if you are with another servicer, say Advantage, once you submit the form to certify your employment, then your loans get transferred to Mohila because they manage that program. Some frequent issues I see. Eligibility. So borrowers just have the wrong type of loan, they're in the wrong repayment plan, they've received misleading information from their servicer, or the payment information is just incomplete. Forms, signature issues on the form are a very big problem. I'm hearing from employers now that are having an issue with this as well. There are specific guidelines for the types of signatures you can have, but it seems like there are more issues there than there should be. And then just incomplete forms. I've had like user error, just entering dates incorrectly, things like that. And then employment is inconsistent, approval of employment, or just not being employed at the time of application for forgiveness. So this is why record keeping is very, very, very important with student loans. And if you have student loans and you're listening to me talk, you probably know this by now. But while the servicer should be keeping detailed information, it is always, always, always a good idea to keep that information for yourself as well, for your own records. And that's records of payment, employment certification forms, when you're sending them in, when you receive, any correspondence you receive from FedLoan or Mohila. And then I also recommend if you do call and speak with a representative, they all have employment ID numbers. So you can ask for that number and the name of the person and the date and time. but I usually stress communication in writing is best, just because then you have a more detailed record. Okay, so now I'm going to talk about the waiver. And so again, to reiterate, the deadline to apply is October 31st. So Halloween next month, almost a month away. So what new items count? So this has been maybe the single most amazing thing that has happened to PSLF, because it has just really opened a pathway and created an opportunity for a lot of folks who have been in public service and not had access to the program, in many cases because they received incorrect information or were confused by the process in some way. So the new things that count are repayment on any loan types. No matter the loan type you have, they will count it if you made a payment. The period of repayment under any plan. So you made a payment on any of the repayment plans that I talked about, any of them will count. Repayment on loans before consolidation, no matter the repayment plan you're on. This is the one that I think people are most fearful of, and I completely understand, because previously you were told if you consolidate your loans, it basically wipes out the history of payments. So the department is now saying, we're getting rid of that rule through October 31st, and we will look back before you consolidate it. What payments did you make while you were employed by a public service employer? Payments that were late or for less than the amount due. If you made a partial payment or you were outside of the, say you were 20 days late on the payment, but you still made it during that month, they're going to count that. You can now get the forgiveness too, even if you're not employed. So like I was talking about earlier with folks who are retired, they can now retroactively apply for this and get it despite being retired. Or for folks who have maybe left public service and work, for themselves, or, are stay-at-home parents, or in the for-profit industry, they can, as long as they put in 10 years worth of public service work and made payments during that period, they can also apply for PSLF. And then another really amazing thing is that the teacher loan forgiveness period, typically you couldn't, they had to be consecutive. You couldn't sort of like fulfill both the teacher loan forgiveness period of service and PSLF in the same time period. You need to sort of stack them. Now they're saying the 5 years you spent teaching, that now counts for PSLF. So that's another really amazing change. Okay, so how do you qualify for the waiver? So there's sort of 3 buckets of folks. So for folks that have at least one FFEL loan or a Perkins loan, so that the FFEL loan is the loans before 2010, and the Perkins loan is one that you borrowed directly from your school. You first want to verify that your employer is eligible. And you can do that through the PSLF help tool, which I have a link to at the end of this. So when you get this presentation, you'll have it. So you check their eligibility in the help tool. If it says, yep, your employer qualifies, then you're going to want to consolidate your loans into a direct consolidation loan. Doing that basically moves it from being a commercially held loan to a federally held loan. So now the department has full control to do whatever they want with your loan, in this case, cancel it. And then at that point, when you consolidate, your loans will get transferred to MOHELA, and then you can use that PSLF help tool to generate the form that you need, and then take it to each of the employers that you worked at during that 120 payments to have them sign off. And then if you have direct loans but have never submitted, the ECF was the former form. It was called the employer certification form. So if you've never told your servicer that you work for a public entity and that you want to apply for PSLF, you just need to submit that form and say, look, I work for the Student Achievement Council. I've worked here for this many years, and then have someone sign off on that. And then your loans will be transferred to MOHELA, and they'll look back at your payment history and account how many qualifying payments you have. And then lastly, the easiest one is if you already have direct loans and you've already submitted an employer certification form previously, you don't have to do anything. Basically, the department already owns your debt, and they already have information about your servicer. So they're just going to look back and see, are there any additional payments here that would qualify under the waiver? If that hasn't happened at this point, definitely let me know, because it absolutely should have happened a while ago. If you are in the position where you have to consolidate before October 31st, it is pretty simple to do. You can do it online. It takes, I would say, about a half hour to an hour. You choose a servicer, identify a repayment plan. You do have to pick a repayment plan, even if you are already at or over 120 payments. And that is just because that's how the process works. Even if you never make a payment on that IDR plan, you still have to choose one. Then it will ask you to use something called the IRS data retrieval tool. And this will basically connect you to the IRS's website and then import your tax information from the last 2 years, or 2 years ago. Then you have to read through terms and conditions. You have to fill out a reference, and then you review and sign a new master promissory note, because the consolidation loan is considered an entirely new loan. So you basically have to sign a new contract with the department. Yeah, that's part of the process. And then I will say that you have to do this by October 31st. So even if you consolidate your loans, like you do the consolidation online on October 31st, that still counts. So highly recommend doing it way before that, but it is something that you can do on October 31st. Okay, some additional considerations. One thing that I think a lot of folks don't realize is that marriage impacts your student loans. So if you are legally married and you file your taxes jointly, then your monthly payment on an income-driven repayment plan uses your entire household income. So this is a problem if your spouse makes significantly more money than you, because it's going to increase the amount of your monthly payment. But you are also able to deduct up to $2,500 in loan interest that you paid. Obviously, you haven't paid that in the last 2.5 years probably, but moving forward or backward, that is something that you have ability to claim. If you are legally married but file separately, then your monthly payment just uses your own income, so it doesn't account for your spouse. However, my understanding, I'm not a tax professional, but from what I've been told, you cannot then claim that interest deduction because you're filing separately, and you lose that right. Of the income-driven repayment plans, the repay plan does not care how you file your taxes. They're always going to take the higher number, so the total household income. So that's just one thing to look out for. If you file together and your spouse makes more money, you want to avoid the repay plan, because it's going to be, if your spouse makes more money than you, no matter how you file, you're going to want to do the repay plan. You're not going to want to do the repay plan. Sorry. And then basically the conclusion there is just, when you're picking a plan, you also want to sort of think like, am I saving more in a monthly payment with my student loans by filing my taxes separately? Or will I save more if I file jointly, because I'll be able to claim all of these tax credits and deductions? I would recommend using a tool like, I know TurboTax, and I'm sure all of the tax preparing companies have calculators on their website, so that you can sort of get a rough estimate of how your tax liability or return will change based on your filing status. So just a PSA. Another thing that has changed within the last couple of years about PSLF is that you can make lump sum payments. So you can prepay future months for the year that it takes for the year of your IDR repayment plan. I should have mentioned this earlier, you do have to, with the IDR plans, you have to recertify your income annually to just basically let the government know your income changed or it didn't, so they can recalculate your repayment if it went up or down. And then these would count as qualifying payments toward PSLF once you certified your employment for that 12-month period. And then another important piece is that you can never make more than 12 qualifying payments in one calendar year. So if you made a huge lump sum payment at the beginning of the year and then made other payments during the year, like one-off payments, they're only going to count 12 in that one calendar year. So you can't like ever double the number of payments. Another thing is, I was just on a call earlier today, the scams are alive and well right now. There are scams, and I'm receiving calls sometimes twice a day about the loan cancellation that was announced, the PSLF waiver. I've been receiving them about the payment pause ending. So if you're getting those calls, you're not alone. So signs of a scam, if they're asking for fees, if they're asking for money up front, it's not legitimate. I would never ask for money. Your service center would never ask you to like pay them to complete a form. That's not legitimate. They usually have names like federal or national or like presidential or something like that. It's hard to differentiate. If you have a bad feeling about something, you can also email me and I can tell you like, yes, that's legitimate, or no, it's not. They also make lots of promises or apply pressure of like, you have to do this now before time runs out. And then they're usually advertised. I get text messages, they're on social media, ads, etc. And then my last couple of things are just plugging more resources that are available to you. So earlier this year, the legislature passed Senate Bill 5847, which is basically a bill to just get more information about public service loan forgiveness out to public employees. So it requires our office to produce some materials, and then I'm working with other state agencies to try to ensure that employers are notifying folks about the existence of PSLF and helping them apply for it. So we are still in the process of that. We have hired someone to really sort of own this process. And I think next year, our deadline to like do all of this is July of next year. So, but definitely by the new year, you'll have more information about this. Okay, my complaints plug. So you can make a complaint to lots of different places. You can always come to us, the Student Achievement Council, at studentcomplaints.wa.gov. This is a site you can use to make complaints about a school or a student loan servicer. But I also work closely with the Attorney General's office and our state's Department of Financial Institutions. So if they receive complaints about servicers, student loan servicers, they get forwarded to me. The Consumer Financial Protection Bureau is a federal agency that you can complain to. The Federal Student Aid Ombudsman's Office, which is a division of the Department of Education, they receive and respond to complaints. And then the Federal Trade Commission, they are really focused on student loan scams. So if you are getting scam calls, I usually recommend that you reach out to them because they are really active at going against and trying to punish those scam companies. So, and then your servicers also have ombudsmen, so you would just want to contact the appropriate servicer. And then here are links to the help tool that I mentioned. There is a really wonderful but very long-winded FAQ on the Department of Education's website. I go there all the time, probably once a day when I have a question that I want to sort of when I want to dive a little deeper. And then the Student Achievement Council, we also have a PSLF page, and we'll be updating it with more information. I'm also hoping to do more webinars in the future in October. So we'll have information there as well about those. And then I am now going to pass it back to John because I think he has a couple more resources.
You bet. Thank you. Let me see if I can do that real quick. Okay. You can now see my screen. Okay, great. Thank you. Just real quick, this is going to take maybe a minute or two, and then we'll get right to questions. So this is some informational press release resources. So basically links to some press releases that were put out from the U.S. Department of Education that pertain to many of the topics that Stephanie just went over. This is a generalized search that goes into that same thing. I also put in here, this is where you can go. This was mentioned by Stephanie as well. This is where you can enter your employees' employment identification number to see if they qualify as a PSLF qualifying employer. Additionally, this goes into student loan repayment, the pause that we've been having since during the pandemic. It explains the upcoming Biden $10,000 to $20,000 one-time forgiveness plan. And then it also kind of goes into income-driven repayment plan proposal for July of 2023. My understanding is that the form for that portion of the debt relief plan is going to be basically coming out in early October. So there's a link there that you can go to sign up for subscriptions for that, as well as just checking up on the website if you prefer to do that. But this gives you directions on how to do that. And then some more information here basically goes into some more of the same continued. It's the eligibility requirements, things you can do now and in the future with regards to this $10,000 to $20,000 forgiveness plan, and then additionally some plenty of frequently asked questions on there. So I think, oh, and then a few other resources here as well. That you can click on as well. They are all there. And then additionally, just so you know, on Thursday, the Financial Empowerment Network is putting on another training for this as well. And by all means, go here. You can register on this link as well to sign up for that. Some more presentation workshop on this same topic. But aside from that, we are ready for questions. So go ahead. If you guys have questions, if you want to put them into the chat, it's probably going to be the best route that we can do this. So I will kind of pose those questions to Stephanie. You can, of course, read them too. But if you guys have specific questions, go for it.
And I just put in the chat our complaint portal. So if you do have questions or complaints, please go there and fill out our form, and we'll get back to you as soon as we can. So someone messaged me and asked if we can still apply for student loan forgiveness. So yes, the student loan, if you're talking about public service loan forgiveness, you can still apply for it. The deadline for the limited waiver opportunity is October 31st. So as long as you get your application or you use that PSLF help tool by October 31st, you will be eligible for the waiver. If you applied after that, the waiver rules wouldn't apply, but the normal PSLF rules will apply for you. And then if you're talking more generally about the like one-time cancellation that Biden announced in August, that is, as John just said, the application is not out yet. It'll be available early October is what we're being told. Some people might not have to apply because if the government already has your income information and knows that you have direct loans, they might just automatically discharge it for you. So yeah, so you might get word that you don't have to do anything, but otherwise that application will be available in October, and it's recommended that you submit it before or by November 15th if you want to have that 10 or 20,000 forgiven before payments resume in January.
Great. We have Debbie. Debbie, you've raised your hand. If you should be able to unmute yourself if you want to go ahead and ask.
Thank you. So I'm still a little confused as far as there was a period during COVID where payments did not need to be made.
Mhm.
And you have to have made 120 on-time payments.
Mhm.
Did you have to make them, like that whole gap in between, is that being counted against you? If you didn't make payments, because I'm trying to lower my hand, sorry. If you didn't make payments during that time, is that going to count against you?
Yes, great question. And the answer is no. So as long as you were not required, so as long as you were eligible for the payment pause and you weren't required to make payments because the government said like, you have direct loans or you have federally held loans, we don't need a payment from you. All of those months that you didn't make a payment, all of those count toward PSLF, provided that you were still working full-time at a public employer. So for example, myself, I've been working throughout the pandemic at the Student Achievement Council, so I haven't made a payment in this whole period, but this whole time is eligible for me to apply to the 120. Does that answer your question? Cool.
Okay, we have another one here. I worked for 2 nonprofits that are no longer in business. How do I circumvent getting sign-offs on my work with them?
Yeah, great question. There should be a box that you can tick on, I don't know what section it's in on the form, that says like it says something to the effect of my employer is no longer in business, or my employer refuses to sign the form. And you should be able to just check that box, and then the department will sort of follow up on that. I assume they will like check tax information to make sure that like you didn't just make up this employer, but you should just be able to check that box and submit it from there.
Okay, great. Thank you. Next one we have is, how can I check the entire history of my loans?
So you can either request that from your servicer, but what I would probably recommend, just because I think it's at least a little bit more standardized, you can download that information from the Department of Education's website. And if you want to email me at this email address, I can send you detailed instructions on how to download that information. And yeah, if you wanted to sort of talk it over with me, that's something I can help you with. But if you just want access to it, I can help you figure out how to do that. Because it's not, you have to navigate through some things.
Okay, next we have, I am married now, but in years past I wasn't. My tax information for that year would be used, correct?
Yes. That wouldn't make a difference. I guess the marriage piece only comes into effect when you're actually making payments. So if you weren't married in the past, but are married now and presumably will be married in January, is if you filed your taxes from 2 years ago, so was that 2020? If you filed your taxes in that year as unmarried, those are the taxes you will use for your income-driven repayment plan. You should be able to still use that because that's what your taxable information is that they use. The IRS or the Department of Education uses the prior year, they call it, so 2 years ago. But obviously, if your income is like really low now compared to then, you can also tell them like, I'm unemployed or I make significantly less.
Okay. Next we have, assuming someone were making consecutive payments until they had 120, it would take 10 years. Why did it say 25 years until you can get that forgiveness on the one slide about the types of repayment options? She's happy to explain if that's.
I know exactly what I mean. So that one slide with all of the IDR income-driven repayment plans, it said 20 or 25 years because if you don't work in the public sector, but are repaying your loans on an income-driven repayment plan, you are eligible for forgiveness after 20 or 25 years. So that's like a separate forgiveness program. It's extremely confusing to explain, but if you are working for a nonprofit or public employer and making payments on your loans and meeting all of the eligibility requirements, you can get forgiveness in 10 years. If you're not working in the public sector, you can get forgiveness on an income-driven plan in 20 or 25 years.
All right, so next we have, I work for a 501(c)(3) currently. The job immediately prior was a college. Do they need to complete a form for me to have payments made while I was employed with them, or any other non-profs count?
Yes, so presumably, as long as the college you worked at was not a for-profit college, then they would be, so if it was a nonprofit or public institution, they would also be eligible for PSLF, but you will need to get signatures from both the college and the current 501(c)(3) you work at. If you worked at a different 501(c)(3) before the college, you'd also need to get a signature from that employer. So basically, each employer you worked for, you need to get a signature on that form for the period of time that you worked there. Yeah, I hope that makes sense.
Okay. Next question we have is, so the forgiveness is only if you've already put in the 10 years in public service, correct?
Yes. Yep. You have to do 10 years of public service and make 120 payments.
Okay. If you have multiple former employers that qualify, would you need to complete a form for each one and have each one sign off? If yes, what if they are out of state and only can get an electronic signature?
So the answer to the first question is yes, you have to get complete a form for each one. And if they are out of state, you can get an electronic signature. I can quickly find the website you use to, or sorry, the part of the website where they have information about the types of signatures that are allowed. I believe it's on that PSLF FAQ. I'm trying to find it. Yeah, I can look for it and attach it, but it is possible, there's just different types of signatures, yeah, that are eligible. You could also just like, you could fax it to them, they could sign it with a wet signature and then mail it back to you or fax it back to you, that works as well. Okay, I'm gonna put the link in the chat. If you scroll down or just search for signature on this page, it'll show you the types of signatures that are eligible.
All right, you ready for the next one?
Yes.
All right, can you share anything about the borrower's defense program?
That is a very different can of worms. There's a lot going on with that. So if you, I don't know, Katrina, if you want to email me about it, I'm happy to answer, because it's, I guess from the 10,000 foot view, it's for folks who attended schools that they feel like defrauded or took advantage of them. It tends to be a lot of for-profit schools that have since closed. So ITT, Corinthian colleges, the Art Institute of Seattle, things like that. You can apply to basically ask the department to forgive your debt because of the experience you had at the school, because they took advantage of you or misled you in some way. But if you have like specific questions about it, please reach out to me directly, because there's a lot going on there. And so I can try to help you navigate it.
Okay. If we were making payments during that pause time, how do we get that money back?
So you should be able to just request it from your servicer. I recommend emailing them if possible, or messaging them through their website, like if they have a chat feature, and then saving screenshots of that, because again, you want to keep records. but you should just be able to request it back and then they'll refund it to you. And that includes if, I don't know that anyone in this room is, this applies to them, but if you paid off your debt during the payment pause, you can still ask for that money back and get it paid back, and then potentially be eligible for this one-time cancellation. So yeah, the money is yours if you want it. You just need to contact your servicer and they'll refund it to you. It might take some time, but it will happen.
Great. Do I qualify for the PSLF if I had periods of unemployment and had to place loans in forbearance? Notes, my loans have never been in default. My loans are already consolidated direct loans.
So you might still qualify for PSLF, specifically if you're working in the public sector now. But if you were unemployed for a period of time, that is not eligible for PSLF because you weren't working at a public employer at the time. It's really like, that's a really important piece, is the like actively employed full time and making payments. So those periods wouldn't count toward PSLF, but but if you're working now, they would count if you're making payments.
Okay. What if I worked for the Treasury Department through a temp service? Does that qualify?
It depends on who your employer was. If your employer was the temp agency and the temp agency is a for-profit company, then no. If the temp agency was a nonprofit organization, then yes. But this is an area that we have really been pushing the department to make changes on, because there are increasingly people that work for the government, but or do work for the government, but are employed by a for-profit company. So it's happening in schools and hospitals, apparently the Treasury Department. So it really comes down to the tax filing status of the temp agency that employed you.
Okay. I've always worked for state government. I paid off my loan several years ago, but I'm in school again. Do I still get credit for paying off my old loans? Can PSLF apply to my new loans?
So you don't, I'm not quite sure what you mean by get credit for paying off my old loans. But if those loans are paid off, then they're paid off. But if you're taking on new debt and you are currently still working for the state government, then any payments you make moving forward while you're employed in the public sector, those would be eligible for PSLF. But you can't sort of like use the time that you were employed in the past to apply to your current loans. Like, that's sort of in the past. It's just payments moving forward. If that makes sense.
Okay, and the next comment there is if you see it, it looks like somebody probably, I think, wanting to just maybe connect with you directly. Would that be correct?
Yes, it looks like that. And that person should email me here or complete our form. And I'm happy to help you out with that. And that goes for anyone. Like, if you have a very specific personal question, please just reach out to us and we can help you.
Okay, great. Next one I have is the Biden $10,000 and the PSLF programs are not mutually exclusive, correct? I can have the 10,000 cleared and be paying toward my 120 payments?
Correct, yes. And so, for example, if you have, say, $50,000 in debt, you can apply to have the 10,000 canceled and then continue making payments until you hit that 120 mark to get PSLF.
Right. Okay. Next question here. I was on an income-driven repayment plan, but defaulted and my loans went to collections. I just now rehabilitated my loans and got them out of collections, but was told I could only be on an income repayment plan once. Is that true?
No, you can only rehabilitate your loans once. to get out of collections. So maybe that's what they meant to say, but no, you can do an income-driven repayment plan forever. I mean, you do it for up to 20 or 25 years, and then you get that forgiveness at the end. So yeah, that is not true. And let me know or reach out to me and I can make sure that you get on an income-driven repayment plan.
All right, next we have, do months worked at a nonprofit during the initial 6 months after graduation, when you cannot qualify for income-driven repayment plans count at all?
If you were in the grace period, so you weren't required to make a payment, then no. One thing that servicers and the department don't do a great job of is telling you that you can actually waive that grace period. So if you did and you were making payments, then yes, but if you didn't, then you wouldn't get the period of the grace period wouldn't count.
Okay, we have another one. Are the 120 payments retroactive? I've been teaching 10 years making payments, but haven't signed up for the forgiveness program. If I'm eligible, do the 120 payments start over?
No, they are retroactive. As long as you've been, like you said, making payments and working full time, you should be able to get the forgiveness now. It might require you to consolidate your loans first and then apply for the forgiveness. But you should also reach out to me and I can help with that.
Just a couple more here. I think what if a previous employer will not respond to proof of employment?
Again, there's that little checkbox on there that you can select that says something like, my employer is no longer in business, or they refuse to sign my form or comply with the form. But if that previous employer is in the state of Washington, I would be curious to know who they are and see if I can't reach out to them and help clear up any confusion they might have.
Okay. Do AmeriCorps service members qualify?
The period of AmeriCorps service does qualify as long as you were making payments on your loans during that period. I know I did AmeriCorps and they really encourage you to put your loans in deferment. So I know a lot of folks do that. But if you did not, and you made payments while you were enrolled, while you were doing your service, then yes, that period of time counts toward PSLF.
Great. And then I think this is maybe a follow-up question to one before, but so if I continued to pay my loan during the pandemic, did you say I can get that money back and continue to pay the loan?
Yes, if you continue to pay your loan during the pandemic and were not required to make payments. So if those payments were voluntary because you qualified for the payment pause, then yes, you can request a refund of that. If you were not eligible for the payment pause, you can't request a refund because that was a payment that was required of you. Yeah, you can get that money back and then continue to make payments on the loan.
Okay, great. Another comment, someone's going to reach out to you. And then, this is interesting. When I look up one of my employers, their eligibility says undetermined. Have you run into this? Example is a local council of governments, so could be considered a local government agency.
I wonder, so if it says that it's undetermined, my guess would be that it is an employer that where no one has ever applied for PSLF. That would be my guess, best guess. In which case it just means that they have to sort of verify or vet that employer. So you can still submit the form and get, your employer to sign off on it and then submit it. And then basically MOHELA and the Department of Education will vet that organization to see if it meets the eligibility requirements for the program. So that shouldn't dissuade you from applying. I will say that for PSLF, you can't work for like a political organization. Those are not eligible. So I don't know if if that describes your situation. If it doesn't, then I would say definitely apply. Really either way, like until you get a definitive no, like keep going forward.
Okay.
What makes you eligible for the payment pause? Great question. So you have to have direct loans. You have to have federally held loans, which means all direct loans and some FFEL loans, some of those federal family education loans. So the way that you tell if you have federally held FFEL loans as opposed to commercially held FFEL loans is one, your servicer has been asking you to make payments the last 2.5 years, or you can look at the Department of Education, that's studentaid.gov. You can look at their website and it should tell you, sorry, studentaid.gov. It should tell you if your servicer, if it says Department of Education before the servicer name, and that means it's a federally held loan. If it says like just the servicer's name, that means it's commercially held, is the best I understand it. But you can also reach out to me directly and I can help you determine if your loans are federally or commercially held.
Okay, did another one just pop up? What is the difference between the PSLF waiver due by October 31st and newly applying for PSLF?
So the way I've heard others describe it and the way I like to describe it is the waiver is kind of trying to right some past wrongs. So the waiver is really for folks who have been making payments on an older FFEL loan that is not normally eligible for PSLF, or they were making payments in a payment plan that wasn't eligible, or any other uneligible circumstance. But they were working full-time for some level of government or some public good. This is basically the government saying like, we messed up, the program was too complex, and we're trying to open the doors to let more people in. The newly applying for PSLF, that is like for someone who like just got into the public sector, someone who just graduated and is about to start a career in the public sector, but anyone who is like just getting started with the PSLF program. So for a lot of folks that just graduated in the last couple of years, like the waiver doesn't really mean a whole lot for them. It's more for folks who have been paying for 10 or 20 years. It's now an opportunity to give them access to forgiveness.
We got another one there. Do we need to resume payments before applying to the PSLF waiver, or can we apply now and then restart our payments once the COVID pause ends?
So the waiver expires October 31st and the payment pause expires on December 31st. So you want to apply for the PSLF waiver now. And then if you have not yet reached 120 payments, you will start making payments again in January. But if you apply for the waiver now, you are maybe just getting, you're getting more payments that previously didn't count are now going to count towards your 120 total. Even if you have to make another year or two's worth of payments, you're just potentially getting more payments toward that 120 total.
Okay, we have one more here. It's what about working for performing arts organizations? Do they qualify as a public entity?
Again, it comes down to their tax filing status. So you can either ask them, if it's your current employer, ask them what their employee identification number is, and then plug that into the PSLF tool that we talked about. and it should tell you if they're a 501 or if they're qualifying or not. But you can, yeah, I would just ask your employer if they are a 501c3 organization. If the answer is yes, then yes, they qualify. If the answer is no, they're a 501c4, then it gets a little more complicated. But as long as the arts organization is 501c3, you're good.
And correct me if I'm wrong, Stephanie, but you can also get the EIN number from a W-2 of a past employer as well, right?
Correct. Yep. Yeah.
We got another one. Does 120 payments paid mean forgiveness?
Well, as long as they're as long as the payments are qualifying for PSLF, meaning that you had the right loan type, had the right repayment plan, and were employed full-time by a public employer. If you meet all of those things, then yes, once you reach 120, that means the rest of your debt is just forgiven. And I should have said earlier, but with PSLF, the forgiveness after, no matter how much you have left over, it's not taxable. So that amount is truly just wiped away. No matter if it's $5,000 or $50,000, it gets wiped away.
All right. Well, just before everyone heads out, I just want to make, first of all, say thank you to all the participants for coming in and asking such wonderful questions. Stephanie, thank you so much for presenting on this and providing so much much needed guidance and information. This is fantastic. As soon as I am able to convert this video, we are going to be posting this on our website, the Office of the State Treasurer's website. So I will also be sending out an email to all registrants with the PowerPoint copy of this presentation. And then as well, I'll follow up as soon as that link is available so that if you need to go back to refer to the recording, it will be there as well for you to view. But I think unless we have any other questions, we're actually done a little bit early. And
Hello.
yeah.
Oh, did you have a question?
Hello, I have a question.
Sure.
Yes, I was wondering if my loans could be forgiven because I was a pair for 25 years. But do I qualify?
Sorry, because you were a what for 25 years?
A paraeducator for 24 years.
Paraeducator. It depends on who your employer was. If you were employed by like a public or a nonprofit school system or school district, then yes. If you were employed by a temp agency or an agency that was like a for-profit company, then no. It really comes down to who your employer was, like who is on your W-2.
Okay. Also about payments, you have to be approved for this thing. You have to be given payments to that during that time. Is that correct?
Yes, you have to be making payments on your loans while employed during that time.
Because I was an income-based, I qualified for income-based because I didn't make that much as a para.
Yeah, and income-based repayment plans, those are the right plans to make payments on for PSLF. And with some of the income-driven repayment plans, if your income is low enough, then you aren't required to make any payments. It's like a $0 payment. Those also count towards PSLF. So I don't know if that was your situation, but just saying, even those $0 payments count.
Yeah. Well, thank you for the info.
Yeah, thanks for the question. And I just wanted to say, well, John just put in the link for the PSLF help tool where you can put in your employer's tax ID information. And then I put in my email address, but it's loanadvocate@wasac.wa.gov. If you have a question that you didn't get a chance to ask today, or one that pops up as soon as you hang up the call, because that happens to me all the time, please reach out. Yeah, no matter the question, we're happy to help.
All right. Well, thank you so much, folks, for participating. Thank you again, Stephanie.
Yeah, thank you.
You bet. We'll see you guys maybe in the future. Take care.
Bye.
Thank you.